And welcome everyone to the CGTN live stream where we are going to be talking about the impact of these so-called U.S. reciprocal tariffs on global trade and the global economy. I'm Michael Wong.
I'm Zheng Chunying, live in Beijing.
So the U.S. has now imposed sweeping tariffs on over 180 countries, regions, and territories. The American economist and Nobel laureate Paul Krugman is saying that these are the biggest shocks to the economy since those infamous Smoot-Hawley tariffs of the 1930s. Professor Krugman didn't say whether or not these bigger economic shocks were referring to the U.S. economy or the global economy, but nonetheless, of course, this is going to be a major shock in terms of how the U.S. trades with the rest of the world. The effective U.S. tariff rate is now north of 20%, Chunying. So just for reference, during the Smoot-Hawley Tariff Act, U.S. effective tariff rates were just under 20%. So now we have effective U.S. tariff rates that are higher than the 1930s. In fact, the highest since 1909, so well over a century ago. 5.4 trillion U.S. dollars worth of market cap wiped out from the U.S. stock markets in just 2 days.
Exactly, that's unprecedented. And as one of the major victims, China is hitting back. The country imposed over 34% retaliatory tariffs on all U.S. imports last night. And that escalation of the trade hostilities between the world's two largest economies have, magnified undoubtedly among global investors about the risks of global growth. And that's why we're seeing JP Morgan raising the odds of a global recession and U.S. recession to 60% from the previous 40%.
Yeah, JP Morgan now saying the U.S. economy is now going to contract by 0.3% for this year. Previously, JP Morgan was forecasting the U.S. economy will grow by 1.3%. And we're going to have more in terms of what the major global financial institutions are forecasting in terms of U.S. global growth going forward in this program. Barclays, I remember off the top of my mind, also predicting that the United States will see a contraction of about 0.1%. Either way, we are seeing now major financial institutions either forecasting a U.S. recession, or we have that dreaded S-word, stagflation, where we have high inflation, low growth, or at least a lot slower growth compared to previous forecasts. So, of course, those baseline 10% tariffs on all countries, regions, and territories, that has already taken effect as of 12:01 a.m. Eastern Standard Time in the United States. We are expecting these higher so-called reciprocal tariffs on 57 of the U.S.'s largest trading partners come April 9th at 12:01 Eastern Standard Time. But right now, let's check in first with CGTN's Chen Mengfei for more in terms of how China is responding to these so-called U.S. reciprocal tariffs. Mengfei, so we were just mentioning these blanket 34% tariffs that China has applied to all U.S. imports coming into the country. Tell us more in terms of what China is doing to retaliate.
That's right. I believe, like many around the world, my phone started buzzing last night at 6 p.m. with all these, shocking announcements. And of course, the biggest one, as you mentioned, as the whole world and especially the U.S. stock market now knows, is this blanket 34% extra tariff on all U.S. goods that will take effect on April 10th. That's around the same time the U.S. tariffs will take effect. And also a slew of other announcements were made on the same day. Last night, Friday, China time, which some media outlets have referred to as Beijing's arrows shooting back at Washington. It's worth noting that aside from the 34% tariff hike, these other measures are not explicitly framed as retaliatory actions against Trump's tariffs, but rather than steps taken in line with existing laws and regulations. But still, let's take a look at these announcements. First, I'd like to mention the export restriction placed on 7 categories of rare earth elements. And one of them is this rare earth metal called dysprosium, which China produces most in the world. This is this highly heat-resistant material that is increasingly being used in advanced products such as semiconductors. And you can imagine that will have a big impact for American producers in these high-tech sectors. And a dozen of U.S. firms were placed under sanction. 11 U.S. companies that have been allegedly doing military technology cooperation with Taiwan were added to this unreliable entity list, which means that they are banned from trading with China and having new investment in China. And another 16 U.S. entities were put on the export control list, which prohibits Chinese firms from exporting to them these items called dual use, which means they can also be used in military applications. And Chinese customs also made 2 announcements last night saying that they're imposing a suspension of some agricultural products, including sorghum, chicken, poultry, bone meals, which are used as animal feed. And these announcements were made citing food safety concerns, which is in line with how the customs make their decisions such as this. And China's Ministry of Commerce also announced yesterday that they've launched an anti-dumping investigation into imported medical CT tubes from US and India. If you don't know what it is, it's this very expensive and important metal component in the CT scanners, which I believe the market rate is from 30,000 US dollars to 200,000 US dollars. So you can imagine that's big money for these American and Indian firms. And lastly, the State Administration for Market Regulation, which is China's top market regulator, also announced last night that it's launched an investigation into US firm DuPont's China subsidiary for suspected violation for China's anti-monopoly law. And that's all we have for so far.
All right, thank you, Mengfei. And in addition to those retaliatory measures taken by the Chinese government, we noticed that several Chinese business associations also issued statements in the past 24 hours. So walk us through what they said.
That's right. This morning at 10 a.m., these 6 Chinese industry associations simultaneously made these announcements on their websites, calling on the U.S. to rescind these so-called reciprocal tariffs, and they're saying how this will harm the entire world's economy, harm supply chains. And if we go through the 6 specific Chinese chambers of commerce for import and export, one of them, foremost is the Chamber of Commerce for mechanical and electrical products, which ranges from everything from computer, phone to automobile to refrigerator. So this takes up a huge chunk of China's export to the U.S. Last year, China reportedly exported more than 300 billion US dollar worth of such products to the US, taking up 60% of China's total export. So you can imagine, these companies that are already facing hardships now have to deal with this extra tariff, and they're extremely concerned. And other chambers of commerce, including agricultural products, which China is a big importer of US agricultural products, and also metals and minerals, chemicals, Chamber of Commerce, which China also imports a lot, and medicine, health products, which China export a lot of medicine and medical equipment to the US, and light industrial products, which including things like toys, which American consumers would be more than familiar with. They love their toys made in China, so they're all impacted. And lastly, I would just mention the textile Chamber of Commerce for import and export. I read all of their statements, and I think for the textile chamber, they had the strongest language against the U.S. They said they would like the U.S. to listen to producers and consumers around the world and correct their wrongdoing, which in Chinese they said 损人不利己, which means it harms others and it doesn't benefit yourself. And they urged the U.S. to correct their course and come back to the right path. And it's no surprise that the textile industry is reacting, very big. According to their own report, about 20% of their exports to the U.S. And of course, they're already facing existing tariff from Trump's first term, about 20%. And that's the reason why a lot of the supply chain has shifted to Southeast Asia. But of course, now Southeast Asia is also hit by this new round of tariff. And, with this staggering world economy, the textile industry is already seeing a decline in some of their orders. So they're particularly concerned.
Okay, Mengfei, many thanks for that update. Our Chen Mengfei there talking to us about China's countermeasures against these U.S. so-called reciprocal tariffs. Thank you so much for that, Mengfei. So, Chunying, I guess here's what we see from China. Again, those 34% tariffs on all U.S. imports coming into China. We have export controls. We have China placing more American companies on the unreliable entities list. And we, of course, have the anti-dumping investigations on certain U.S. companies. But also, I might add, a complaint filed to the World Trade Organization
exactly
as well. Okay, let's get more from the United States. Our Nathan King is in Washington, D.C. with more in terms of Mr. Trump's latest tariff salvo.
The latest shocking tariff moves from the Trump administration. China was bound to respond, responding quickly and in proportion. Trump, another 34% on Chinese imports, exactly what Beijing is doing, 34% on US imports into China. That will take effect April 10th, the day after Trump's new tariffs come into force. But some are going in right away. Let me read you the list. On April 4th, 7 rare earth export controls coming in. Now remember, China not only mines these but processes a lot of them. They're very important for US industry. 11 US companies put on the unreliable entity list, including a couple of drone makers, and they need Chinese tech for that. 16 US companies added to the export ban list. Some are security related. They're starting a probe in certain made US medical equipment. That includes the Fortune 500 company DuPont. 6 US companies banned from exporting food and agricultural goods to China. The Chinese government, even though it's a holiday, issued a rare statement saying this practice of the US is not in line with international trade rules, seriously undermines China's legitimate rights and interests, and is a typical unilateral bullying practice. And now Trump, of course, hitting back in his usual undiplomatic way to China, saying on his Truth Social media platform, China played it wrong, they panicked, the one thing they cannot afford to do. When the US really wanted China to import a lot of its energy, and obviously China is responding. Nathan King, CGTN at the White House.
All right, and for more analysis on the impact of the China-US trade tensions, we're now joined by our guest, Mr. Liu Zhiqing. He is the Senior Fellow of the Chongyang Institute of Financial Studies of Renmin University in China. Good to have you with us, Mr. Liu. So let's start with China's retaliatory trade tariffs. We just mentioned that China imposed a sweeping 34% tariff on all U.S. goods. That's stronger than the previous act, which targeted only on specific areas of goods. So what's the strategic intent behind such a strong response from your perspective?
Yes, this is a good question because many people are trying to understand the real reason behind this action. But I personally prefer to use that this is the right response for Chinese government, not the retaliation, because we don't take any the retaliation with the United States, especially for the tariff offers, because retaliation is not the right way to solve all the disputes. So response firmly and tell them that what should be done and what to do. This is a very important thing. So we have already 7 items, 11 measures that are to deal with this tariff imposed by the U.S. Because since a long time we have already shown our sincerity to solve this problem by negotiation, by dialogue. But this is not accepted by the United States. That's why we have to take all this response in one action, in one move to show our determination. Also, we send the message to the United States and also to the rest of the world that China has got ready to deal with all the challenges we are facing. And we hope that this action could be understood and well accepted by the global community.
Yeah, so Mr. Liu, we are seeing other countries saying that they want to see if they can negotiate with the Trump administration first and then see if they can lower these tariffs. But of course, China, this is the first major economy with the first major response to these U.S. reciprocal tariffs. What do you think that means in terms of the message China is sending across the global community?
I think this is a very important message that China has sent to the global community with 2 points. One point is that with the bullying, the actions that are imposed by American side, no other possibility that to deal with the U.S. government, because they are really want to dominating the trade community and also trade the rules. And secondly, we have to ensure that the whole community of the global market could understand that the real meaning and behind the China's action. Because from China's the actions, and we send the message to the global market, we say that we respect, we accept the international law, but not the American rule. The American domestic rule is not the international rule. So this is the basic point I think China has to show to the rest of the community. And actually, China also shows our sincerity to deepen our cooperation with all countries, including the United States. So we open our door, open out all these opportunities to further dialogue and for further negotiation. But first point, we have to show our strong determination. We have our full and strong response to the United States.
Thank you, Mr. Liu. And also, I have another question. Looking forward, we just mentioned that we are witnessing an unprecedented turmoil caused by this trade tensions between the world's two largest economies. And from your perspective, looking ahead, what could that mean for the global economy? And how will this escalating trade tensions affect both China and the U.S. economy?
I think from the public media or even the international response from different countries and also different politicians, they have already said that the people always show that the end of the America or the end of the globalization. They show that the action taken by the United States. So in this way, we have to pay great attention to show our sincerity, to have closer cooperation with the rest of the world, because it's important to show our cooperation method with them.
Well, Mr. Liu, let me ask you specifically in terms of how well prepared China is this time around to Trump 2.0. How resilient is the Chinese economy when it comes to withstanding this latest round of tariffs from the Trump administration?
This is a very good question, because as we know, China has learned a lot since 6 years. And in the first term of President Trump, I think China has learned something. At the very beginning, that China is always that had some problems and to deal with the uncertainties and the challenges. Nowadays, I think by the past 4 and 6 years, that China has gathered a lot of the experiences. And actually, we are also on the position that to have close cooperation with the rest of the world, because we see that all the countries, they are facing the tariffs. They have firmly opposed this action taken by the United States. From the scenario on the action taken by President Trump by the signing of this bill in the Rose Garden, he shows the menu list with other countries in the menu. Who is on the table? Only the United States alone. So in this way, that China has already got good experience and prepared in all different sections of industrial. We have restructured our industrial, and also we have improved our supply chain and the industrial chain in order to deal with all these difficulties, because we diversified our products and export and import business. So in order to avoid any external pressure from outside. So this is the basic what we have prepared in the past years.
Okay, Mr. Liu, many thanks for your thoughts on all of that. Mr. Liu Zhiqian, Senior Fellow at Renmin University's Chongyang Institute for Financial Studies. Zhiying, so Mr. Liu there was mentioning how China was diversifying its exports. Yeah. So if we take a look at 2017 numbers, China's exports to the United States accounted for about 17% of China's total exports. But now, fast forward, we are down to under 15%. So China is now exporting, I guess, more to other countries around the world, especially to more developing economies, to prepare, I guess, for a potential Trump 2.0. Yes. Okay, of course, after Mr. Trump took office for the second term, there was a flurry of tariff activity from his administration. Let's have a review, take a look at the timeline of what the Trump administration did in terms of U.S. trade policy since taking office.
The golden age of America begins right now.
Tariffs form a central part of Donald Trump's political philosophy. He imposed them in his first term and was quick to announce a raft of new measures following his inauguration on January the 20th.
Tariffs are not just about protecting American jobs. They're about protecting the soul of our country.
On day 2 of the presidency, Donald Trump announced plans for a 25% tax on imports from Canada and Mexico, which he claimed was a response to the flow of the illegal drug fentanyl, as well as migrants from both countries. But the move has proved difficult to implement. The tariffs were introduced on February the 3rd, only to be postponed the next day. When they were reintroduced in March, Canada retaliated with $20 billion worth of tariffs on American goods. So 2 days later, President Trump postponed them again until April. Car imports are another target in a bid to boost domestic production and sales. A 25% tariff on all cars imported into the US was announced on February the 12th to come into effect in March. But that was later delayed until April the 2nd, with a tax on car parts postponed until May. A 25% tax on steel and aluminium imports was announced in February and did go into effect on March the 12th. The European Union retaliated with $28 billion worth of tariffs on US goods, but these have been postponed to give time for negotiations.
Tariffs are taxes. They are bad for business and worse for consumers.
Chinese exports are another major target. On February the 1st, the US imposed a 10% tax on all Chinese goods, accusing it of allowing fentanyl exports to the US. Beijing retaliated with $14 billion worth of its own tariffs on US LNG and agricultural equipment. In March, the US placed an additional 10% tax on Chinese imports, prompting further Chinese countermeasures, this time involving US food and agricultural products.
If the US continues on this wrong path, then we will fight to the end.
From April the 2nd, US tariffs will affect dozens of countries around the world, including Canada and Mexico, much of Europe, along with Japan, South Korea and China. The new tariffs coming in will include a 25% levy on all car imports, along with all goods from Mexico and Canada. They'll join existing tariffs on steel and aluminium, as well as Chinese imports. Further taxes on timber, semiconductors and pharmaceuticals could also follow. Now the world's waiting to see what further retaliation the US may face, while President Trump has warned that any such countermeasures will be met with even higher tariffs. The global trade wars are only just beginning. Michael Voss, CGTN.
Well, Michael, to Trump's expectation, the tariff was supposed to make American great again, but in reality, perhaps that was not the case. We noticed that the Wall Street plunged for a second consecutive day on April the 4th, and also the Nasdaq Composite officially entered a bear market. So for more updates on the U.S. stock market, let's go live with our reporter Hou Jing, who's now in Beijing. Hou Jing, fill us in.
Okay, it seems like our Hou Jing might be muting her microphone. Hou Jing, if you can hear us, you got to unmute yourself.
Oh, sorry. Can you hear me now?
Yeah. We were just asking you about an overall wrap-up of how the U.S. equity markets responded to Trump's reciprocal tariffs.
Yes, the U.S. stocks really slumped due to Trump's reciprocal tariffs, and the Nasdaq plunged nearly 6%, its worst drop since March 2020, while the SP 500 fell nearly 5% and Dow fell nearly 4%, marking their largest single-day declines since mid-2020. And for multinationals, for example, Apple, which declined by 9%, and Nike declined by 14%, were hit hardest. With tech stocks, for example, Nvidia declined by 8% and Meta 9%. They all suffering heavy losses. And economics warn of stagflation risks as tariffs threaten higher prices, reduced economic activity, and potential recession. And the post-market trading saw further declines with SPY ETF down by 2% and auto retail stocks collapsing. And also, there are analysts warn that the prolonged tariffs could squeeze corporate margins, worsen consumer prices. That's the update from the U.S. stock market.
Yeah, Ho-Jing, so we were mentioning at the beginning of the program, 5.4 trillion US dollars worth of market cap wiped out from the US equity indexes, the three major ones, the Dow Jones, S&P 500, and NASDAQ. Within just 2 days' time, we didn't see the Dow Jones Industrial Index falling by 4,000 points ever. That is an absolute first. It's an absolute bloodbath when it comes to U.S. equities. Talk to us more about how European and Asian markets performed after these reciprocal tariffs were imposed.
The Asia saw mixed reactions, with Japan's Nikkei 225 tumbled by 2.77%, with auto stocks battered by 25% U.S. autos tariffs, and their Toyota dropped to its yearly lows. Well, conversely, India's pharma sector rallied on tariff exemptions, while Malaysia's glove makers gained from widened tariff gaps against Chinese rivals. And China's A shares showed resilience, with indices dripping mildly post-tariff announcement and supported by China's domestic demand and tech self-sufficient policies. While in South Korea's defense stocks rose on geopolitical tensions, though the broader markets faltered amid growth downgrades. And for European stock markets, Europe faces broader declines, with the FTSE 100 down by 1.4% and the DAX sliding 2.3%. And for the auto stocks, for example, Volkswagen and BMW were hit hardest by the 25% U.S. tariffs, while the retail and tech mirrored U.S. Sell-offs. And analysts warn of a stagflationary trap as tariffs threaten to amplify inflation and stifle growth, with Morgan Stanley projecting prolonged volatility. And also, the political negotiations for exemptions remain critical, but market sentiment stay fragile, with investors pivoting to bonds and gold amid policy uncertainty. That's the update from the Asian and European markets.
Okay, Ho-Jing, many thanks for that update. So, Chun-Ying, of course, like our Ho-Jing was reporting, a lot of uncertainty, a lot of volatility in the global markets. Again, 5.4 trillion. I think we should provide a little bit of context for our audience in terms of just how large $5 trillion actually is. Germany is the third largest economy in the world. Its GDP, its total economic output, Chun-Ying, back in 2023 came in at $4.5 trillion US dollars. So that is how big 5.4 trillion is. So you're essentially wiping out the entire German economic output for 1 year, plus 20% more when it comes to US stock losses in the past 2 days. An absolutely crazy big number. Yeah.
And I think Ho-Jing is still with us. What else would you like to offer us? Anything else would you like to say? Any more updates from the Asian markets?
Okay, it seems like we cannot get to our Ho-Jing right now. But again, in terms of how the U.S. equity markets are performing, Chun-Ying, you were mentioning the NASDAQ is now in bear market territory.
Yeah.
So that means.
So tell our audience, what does it mean for entering a bear market?
So a bear market essentially means that you're off by 20% off your market highs.
Yeah.
So the NASDAQ is down north of 20% plus. I think at its latest check, compared to its December highs, the NASDAQ is down by about 22%. The Dow Jones Industrial Average, Chun-Ying, that is pushing close to a near 15% loss compared to its record highs in December. So the Dow Jones is not currently in bear market territory. It is in correction territory. So correction is when the markets are down by about 10%. So the Dow Jones Industrial Average down around 15% compared to its record highs in December, pushing close to a bear market, right? But the S&P 500 is down by over 17% compared to its December highs. So the S&P 500, I think, is getting very close to bear market territory. And the thing is, with all this volatility, we don't know if the market has found a bottom. It perhaps is, but I feel, Chun-Ying, even if the market has found a bottom. The uncertainty is incredible, right?
Yeah. And the question is, perhaps, is what's next? Will there be an emergency talk that will lead to effective resolution? Will there be negotiation talks between Trump and other European or Asian leaders? We don't know. Or will President Trump counter with even more crazy and tougher measures? But I think one thing is clear: we're really heading toward the risk of heading toward a global trade tension is rising, and the economic stakes have never been higher.
Yeah, I think what I'm going to be looking at in terms of the next steps are how other countries will retaliate.
Yeah.
Right? So China has responded with its countermeasures now, but in terms
That's
of
what I'm interested in as well. Yeah.
Because right now, like you mentioned, are we heading towards a global trade war? We don't know. It seems likely at this point because all of these major economies are being hit by these so-called reciprocal tariffs. We're seeing this flight towards safe haven assets like gold. And the way the United States calculated these so-called reciprocal tariff rates, I think, very questionable. I think The Economist came out with an article saying that the formula that the Trump administration used to calculate these reciprocal tariffs are so random. It's like taxing you based on how many vowels you have in your name. That's how random this formula is.
So like you just mentioned, I'm quite interested in what are some of the retaliatory measures that will be taken by other countries affected by the Trump's tariffs. So that's why we're here today.
Yeah. I mean, my concern is that the U.S. will escalate even more, right?
Really?
Because based on the U.S. formula in terms of how they calculated the reciprocal tariff rates, they essentially took a country's trade deficit with the U.S. and divided that by the U.S. import value from that country and then divided by 2. So that suggests there's room for the U.S. to further escalate and further increase those reciprocal tariffs.
Then the world will be more
Highly
crazy.
uncertain, highly uncertain.
Highly uncertain.
Yeah.
So for more on the retaliatory measures from the Asian markets, from the Asian countries, we're now joined live with our correspondent Shane, who is now in Seoul. Hi Shane, good to have you with us. So tell us, how has the South Korean market reacted to the U.S. tariff policy changes, and what are some of the immediate impacts that you have been observed?
Yeah, I've been following this rather closely the past several weeks and months. If you want to talk about how the markets reacted most recently on Friday, the market here closed with the benchmark Kospi down about 0.9%. It was the third straight day of losses here in South Korea. But obviously, these tariffs are going to have a wide-ranging effect here in the country, a country that relies heavily on exports. In fact, 44% of the nation's entire GDP is comprised of exports, and about a fifth of that is auto exports. Just one industry, just to name as an example here, but one recent research finding by City Research showed that the effects of all these tariffs on South Korea's economy as a whole would be about a decrease of about 0.2 of an entire percentage point on the nation's entire GDP. So it's an understatement to say that these tariffs are going to have a significant effect on the country. Now, obviously, if you've been following the political situation here in Korea, that's also given investors a lot of uncertainty, a lot of means to be uncertain. But of course, with the court's ruling yesterday to finally impeach or uphold the impeachment of President Yoon, the uncertainty has been lifted, but again, with the markets reacting, going down despite the Constitutional Court's ruling, goes to show just how of an effect investors are worried about these sort of tariffs that are going to affect the country here. Now, in terms of which industries, the industry ministry here is trying to reach out very closely to individual industries as well as companies. In fact, yesterday they held a relay of sort of negotiations and talks with the private sector, from home appliances, displays, and machinery. And on Monday, they are scheduled to speak with representatives from rechargeable batteries industries, the petrochemicals industry, as well as textiles, because these are all industries that are vital to the South Korean economy. Aluminum tariffs, iron tariffs also hitting South Korea very hard. I actually attended a meeting between the country's trade minister here, or actually the minister of small and medium-sized businesses, with representatives from the aluminum industry, and their concerns are very widespread. Major companies like POSCO, or if you want to talk about Hyundai Motors, they could probably survive some of these tariffs with some cushion, but it's a lot of the secondary and tertiary markets, a lot of the suppliers, for example, auto car suppliers that don't have the means to necessarily export to the U.S. That are going to be directly hit, and they are going to be really at a crossroads of how to move forward with that. But in terms of what the government can possibly do, there are what companies have been asking the government are for some export vouchers in the form of subsidies, emergency cash injections to help them stay afloat in the short term. But how this would help in the long term remains to be seen. Also, in terms of negotiating exemptions, country by country exemptions, South Korea, because of the leadership vacuum here, no representative has actually spoken to U.S. President Donald Trump. There have been numerous officials from the trade ministry and the industry sector here that have traveled to Washington and met with their counterparts, including the defense minister. But from the highest of positions here, South Korea hasn't had even a phone call with President Donald Trump. So there's a lot of worry here that this leadership vacuum is going to affect the country in the long term, because without a leader for the next 60 days at least, when a presidential election will be held, that means that 60 days where there will be more uncertainty into how the country will shape its economic policies moving forward under these trade tariffs.
Yeah, Shane, an absolutely not ideal time, of course, not a good time for South Korea to be facing these tariffs from the United States. So the Trump administration is placing 25% tariffs on South Korea, of course, a treaty ally. You mentioned so many sectors and industries that will be potentially affected by all of this. Autos, of course, you mentioned petrochemicals, home appliances, small and medium-sized enterprises, I think not just in South Korea, but all around the world would be impacted in terms of what these tariff policies mean from the United States. From what we understand, Shane, Acting President Han Duck-seo has held an emergency meeting regarding these so-called reciprocal tariffs. Can we expect any countermeasures from South Korea if negotiations don't really get anywhere with Washington? The U.S. president was saying that if other countries offer what he calls a phenomenal offer, then maybe we can see some movement in terms of tariff policy. But can we expect any countermeasures?
Well, from the acting president himself, Han Duck-soo, his role, of course, is going to be to try and keep state affairs, not just in politics or diplomacy or the economy, but throughout all sectors, to keep sort of a steady sort of base until elections, until the next leadership or administration comes in. Now, as far as what sort of negotiations or leverage South Korea may have in their belts, and if the past is any indication, South Korea has a free trade agreement with the U.S., and it's an agreement that was renegotiated under President Donald Trump during his first term, where South Korea made some exemptions and some concessions, especially in the auto industry, where more U.S. cars would be imported here in South Korea. But a lot of the agricultural sort of roadblocks and barriers is another area that the U.S. Tries to bring up in these negotiations. So whether South Korea can negotiate sort of any exemptions or on a country by country basis, again, there needs to be a representative going to Washington to try and plead South Korea's case. But that's not the ideal situation at this moment. Now, Choi Sang-wook, the acting finance minister, he's also was the acting president for a while Prime Minister Han Duck-soo was impeached. He's also met with other business lobbies here, the Federation of Korean Industries, also the Korea Chamber of Commerce and Industry. And it's rare for all these business lobbies to come together and voice one opinion, but all have indicated that they want to lift these uncertainties in sort of their respective industries here. So South Korea doesn't have the leverage right now. Unfortunately, the political situation is a major roadblock in terms of dealing with Washington at a fairly crucial time here. So that's sort of what the situation South Korea is in right now. But it'll be interesting to see. It's going to be a major issue in these upcoming presidential elections during the campaign to see how South Korea, what candidate comes up, how are they going to deal with a Trump administration that's very protectionist, and for a country that needs to deal with exports, it's going to be a huge task on their hands.
Okay, Shane, many thanks for that update. As always, our Shane Ham for us in Seoul. Thank you, Shane. All right, Chen Yu, I think what also I'll be looking out for when it comes to the East Asian economy is, can we get some kind of stronger trade deal or at least more regional integration here in East Asia, Southeast Asia, between South Korea, China, and Japan? Because like we were mentioning, South Korea is being hit with a 25% tariff. Japan is being hit with a 24% tariff. China an additional 34%, India 26%. A lot of Southeast Asian countries are getting hit with high tariffs.
Yeah, so we're looking at how like the regional integrations and how the free trade framework within the Asia Pacific region could, help the Asian economies prosper and how to help the Asian economies realize their economic potentials.
I think a positive thing right now that Asia has going for it is Asia is home now to the largest free trade agreement in the world, the Regional Comprehensive Economic Partnership. This is the largest FTA. So I think that potentially may help to offset some of the tariffs that we see from Washington. But we know, of course, Asia is so deeply embedded in terms of global value chains. We're going to have to wait and see how all of this plays out. But at least we have a number of regional free trade agreements here in this part of the world, and also many more trade agreements currently under discussion.
And perhaps, hopefully, that will, play a bigger role in generating a global trade as well.
Yeah. Well, let's get to Jakarta right now. Let's get to Southeast Asia and Indonesia and check in with our Robert Lin Purba, our correspondent in Jakarta right now. Robert Lin, thanks for joining us. Of course, the U.S. is hitting Indonesia, one of the largest developing economies in the world, with a 32% tariff rate. How are the markets in Indonesia reacting? How is industry and business reacting in Indonesia right now?
They're reacting very poorly. What that means is basically mass layoffs, predictably, for Indonesia, because the industries that Indonesia exports to the U.S. relies heavily on labor. For example, the textile industry, the palm oil, the electronics rely heavily on labor. So experts are saying they're predicting mass layoffs. The economy will slow. This will be a very bad thing for Indonesia. There will also be a recession for Indonesia and also other countries that are impacted by the tariffs in their respective countries. Now, the United States is a main trade partner for Indonesia. We're at $28 billion of exports to the US, and that already accounts for around 10% of the total exports of Indonesia. A chunk of the GDP will be lost. Stock markets will be in the reds. The rupiah will weaken, and also commodity prices will rise. So it's a very bad thing for Indonesia, and the government is trying to scramble and look for ways to solve this problem.
Yeah, so in terms of the way that the government is going to solve the problem, tell us more about that. How is the government reacting?
Well, as of now, Indonesia is already meeting with Malaysia. Right, they're meeting they're saying they're going to safeguard the economic interests, of course, and they're emphasizing on ASEAN unity, as ASEAN is an economy as a whole on its own. Other countries like Thailand is also impacted at 36% tariffs. Vietnam at a very high 46% tariffs by the United States. Now, what the government is doing and what they will do is, of course, to stabilize the rupiah, to increase the purchasing power of the people. And also, Indonesia is now a member of BRICS, of the Global South. De-dollarization is also a plan to further use local currency. And also, this is a problem not just for Indonesia, but also for other ASEAN countries, which depend on trade to the US as well. And they're trying to simplify regulations. And an expert was telling me that they need to look for new markets as well outside of the US to export their goods to, such as to Latin America is a possibility, to Europe is a possibility, the Middle East, and BRICS as well. An alternative that this expert was telling me was about the relocation of certain production hubs. For example, Vietnam has 46% tariffs, which is higher than Indonesia. An idea is to relocate production hubs or factories from Vietnam to Indonesia, which has a lower tariff, which would make sense, which they can then export these goods to United States. That's an alternative, but other than that, the government in general is saying that they're looking to expand, of course, trade partners and also to increase domestic consumption and also to boost the localization of goods, which means to downstream raw goods to be processed in Indonesia, which then will be exported.
All right, thanks for your update, Robin. Great to have you.
All right, thanks for that, our Robin Purba for us in Jakarta. Thank you. Right, so again, we have to take a look at these tariff rates, massive tariff rates on so many developing economies in the region. Indonesia, again, 32%.
Yes.
Malaysia is at 26%. Vietnam,
Even
like our Robert
70%.
was mentioning, Vietnam's at 46%. And then we have Cambodia at 49%, close to 50%, and then Laos at 48%. So really, really heavy tariffs when it comes to all of these major developing economies in Southeast Asia. We're going to see how supply chains and maybe shift here in this part of the region, and whether or not we're going to see more intra-Asia trade or intra-ASEAN trade.
Yeah.
But of course, the so-called Liberation Day from the Trump administration is being billed as a renewal for the United States. It's supposed to lead to fatter paychecks and lower prices for American consumers and reindustrialize a U.S. industry as well. That's the promises that the Trump administration is giving to the U.S. consumer, to U.S. families and businesses after his speech on so-called Liberation Day. But is that really going to be the case? What perhaps can AI tell us? Let's take a look.
On April 2nd. From this moment on, America's decline is over.
Liberation Day promised us the stars, but tariffs kill our cheap Chinese cars.
I just spent $33 on dinner tonight.
Deals just hot air from your top.
What are you talking about? Was $8.25 now $6.89? Like this is some amazing deal.
Higher food prices. Are you getting sick and tired of rising food? Food prices are again going up,
especially for eggs and meat.
Your taxi truck, your taxi chair, Midwest burning in your dumpster fire. Canada coast, Mexico side, free trade salad, but you don't its pride.
Because many countries have taken advantage of us.
You lied. We'll win, but they kept about 10%. Jobs, robots, sugar, not legal rent. Satellite's garage. As well sinks. The GDP's limping the feds out of trace. Your patriot tax made Wall Street sick. As I explain, that's how God is knees. But your body's still cashing on loophole schemes. Look what your taxes do. Eggs up 200%, spreads a mortgage too. Look what your taxes through. Goes by, yes, we can't afford to steal. Liberation Day, more like the parade. Thanks for the tariffs, and God bless you, babe.
A Liberation Day is more like a dead parade. That's quite impressive.
I was impressed by that AI video in terms of, I guess, what lyrics it can come up with when it comes to Liberation Day. But again, it's hard to imagine that U.S. effective tariff rates are now higher than it was prior to 1930s and the Smoot-Hawley Tariff Act. It is absolutely mind-blowing.
Yeah.
No.
And for more analysis, we're now joined live by our guest, Mr. Einar Tengen. He is the Senior Fellow from Taiho Institute of Asian Narratives. Great to have you with us, Mr. Einar.
Pleased to meet you.
Yeah. So could the recent escalation of the U.S. tariffs on China exacerbate the domestic pressures in the United States? From your perspective, who will bear the cost of this?
Well, obviously, the American consumer first, and then globally second. By the American consumer, what's happening is that two parts. The first part is the tariff itself. What happens is, literally when the goods come in, as you've probably already gone through, somebody has to pay that. That's the importer. And then the price increases in one form or another has to be passed on eventually to the consumer. But then on top of that, what Donald Trump has done is the dollar is now depreciating. And with the dollar depreciating, that means what you could get for $1 yesterday, if it depreciates 10%, you only have 90 cents towards whatever you were going to buy. So this will enhance the amount of inflation that people are facing. And it's going to be very, very tough. 1/4 of all American consumer purchases are made on outside the United States. They're imports, so it's very it's going to be very, very difficult for them. And then on the global sense, what happens is you have decreased demand as the U.S., which is the largest consumer in the world, almost 20%, as they cannot afford to buy more, and it's very expensive to buy abroad, even if they can't replace it within the U.S. because simply they don't have the kind of manufacturing that's necessary to produce these goods, whether it's shoes or clothes, etc. So globally, demand will go down. That will have a knock-on effect in terms of jobs, the economy, tax revenues, etc. And you'll have a kind of a reverse downward cycle. And instead of a multiplier that goes up, you'll have a multiplier that goes down. And the danger is that it goes beyond a recession and into a depression.
That is a very scary thought indeed. Einar, hi there. This is Michael. Thanks again for joining us. Let me ask you, Einar, about your thoughts on what this all means for, I guess, lower income American families, because as we know, tariffs, they are a tax on consumption and they are regressive. So lower income households, I feel, would bear a disproportionate burden. How is their outlook looking like in terms of inflation, in terms of higher costs for such a wide, broad swath of products?
Well, Michael, you're absolutely right. And it's not just the tariffs. When the dollar goes lower, it can buy less, and therefore that makes everything even more expensive. So it's an enhancer. It's a double whammy against them. Now, let's look at some statistics. 70% of the people in the United States before the election thought they were living paycheck to paycheck. If you start looking at credit card, loan, auto loan, mortgage defaults, they're through the roof. The amount of credit card debt keeps climbing. People are literally borrowing to take care of, food for their children and things like this. And at some point, they have to pay that back. They were hoping that Donald Trump would be able to control prices because he said he would. Day one, he was going to control prices. Well, that hasn't happened. So the American consumer, especially the lower class ones and middle class, because you have to also remember that 50% of everything that's bought in the United States is bought by 10% of the population. So, let those numbers sink in. 90% are buying 50%. Which means that most of those people are concentrating on essentials. They're not buying lots of choice items, things like that. They're not buying Apple Watches or Ferraris. They're simply trying to get by. So it's going to hit them disproportionately hard. A lot of these people put their trust in Donald Trump, and this will have a political knock-on effect as those people, especially as we get closer in 14 months to the midterm elections, I would forecast that as this continues, Donald Trump is going to be facing a very, very different House and Senate, one in which there are large majorities who are against his policies.
Yeah, Mr. Anner, like you just mentioned, it's the U.S. consumers that are bearing the cost. And in addition to the U.S. consumers, what about we're witnessing it's an unprecedented trade turmoil. So what about the effect of the trade policies of its allies? For example, the Japan and South Korea. How will these allies be impacted, and how would Trump's administration move affect the global supply chain in general?
All right. So, one of the things that I've been asked this question many, many times, and here's the problem. Trump is bluffing. So, we can talk ad nauseum about the effects on individual countries and things like this. But the fact is, he's pretending he has 4 aces when in fact he doesn't probably even have a pair. He is trying to bluff the world. His idea was to put out this simplistic formula that doesn't even make sense. I mean, taxing penguins who don't produce anything? Come on, that's silly. He's going after everybody. It was, even let's take, for instance, Israel, who he's always saying he supports 100%. They can bomb and kill as much as they like. He put 17% on them. Now, you have to keep in mind that the Israelis dropped all their tariffs against U.S. goods. So right now, they are confused. They're wondering, since we're supposed to be this great ally, we were told to drop our tariffs, we did, and now we got hit by 17%. So I don't think there was a lot of thought that went into this number against everybody. He was just simply sending out this huge message, I'm going to wreck you. This is very much of a playground bully way of doing it. Everyone line up and give me your lunch money or I'm going to pound you, until you're senseless type of thing. And he expects countries to literally go to Washington, get down on their knees and say, what do I have to do, Donald, to, get these tariffs off? And it's not happening. And the greatest threat to that has been China, not because China has responded in an aggressive way, but it has been very, very deliberate. And they've been pacing their responses to Donald Trump's tariffs and threats. So now when China fires back at 34% tariffs on U.S. goods coming in, puts more restrictions on rare earths, so we're not going to take your chickens, we're going to investigate medical equipment. All of a sudden, the world is taking notice. They understand that if you stand up to Donald Trump, as Canada is doing, and as it appears that at least some of the EU is about to do, you have a much better chance than throwing yourself at his mercy, because he doesn't have any. He doesn't feel empathy. So at this point, talking about what's going to happen to their economies, this is going to be over fairly soon. Donald Trump cannot stand the heat. Remember, this is somebody who watches television, 5-6 hours a day by his own admission. And he likes to hear good things about himself. Right now, there isn't a channel, perhaps one, that is saying anything good about what he's doing. He also always constantly monitoring the polls. He's down in the polls. And then the market. He's always measured himself against, being able to get the market up. And now the market has had historic low, $6.4 trillion lost in the last week, $10 trillion just out of the U.S. markets, $10 trillion globally. This is the single greatest wrecking ball that the financial world has ever had by an individual. Remember, COVID created the same kind of controversy, but that was a natural disaster, all right? This was not done by one person. So at this point, Donald Trump is the $10 trillion man. He's going to go down in history as somebody who almost single-handedly attempted to wreck the U.S. economy and the world economy. And this is not going to go on for much longer. If it goes more than 2 months, I would be very surprised.
Well, Mr. Tang, Mr. Einer, you just described China's 34% tariff aggressive. Then my question to you is that
no,
do you think you said that the responses?
No, I said that China is not being aggressive. They're pacing. That means that as U.S. puts on tariffs, China responds in kind. China is not trying to pump up its response. It's just responding tit for tat. If you do this, we will do that, showing very clearly that
And do you
China
think-
is taking measured steps.
And do you think that China's tit-for-tat measures could lead to more retaliatory tit-for-tat measures from other countries?
Yes, I do think so. I think that China's example of standing up to the bully is going to rally other countries, not necessarily to stand with China, all right? Maybe ASEAN would, but there are effects that are going on. Look at BRICS. BRICS could take a position. You could have South America, Africa, ASEAN itself, the central stands. Central Asia could take a stand on this. A little more difficult to see exactly what's happening with Europe, but they might join in. But my point being, if there was a coordinated response to Trump's tariffs by these countries, even if there were 3 or 4 different ones, it would speed up the end of this kind of nonsense. Trump cannot, all right, take the beating that he is getting in the polls, in the market, and on the news wires. He will back down, and you already see this. I mean, he's talking about TikTok. He's going to trade TikTok for the 34% increase in tariffs on China. That doesn't even make sense, right? You don't trade a private enterprise deal for if you think it is a national priority. So right now you see Donald Trump trying to figure a way out of this. Because he's gotten in too deep. And it's so many things. I mean, people are laughing at the idea that he's going to put massive tariffs on the uninhabited islands where penguins live.
Yeah, it is kind of confusing, Einar, because you mentioned, look, these are sweeping tariffs. They are on uninhabited islands, penguins, I guess, so inhabited to a certain degree. Also, when looking at this full tariff list, Saint Pierre and Miquelon, which is a French overseas territory, getting absolutely hammered by U.S. reciprocal tariffs at 50%. So last time I checked, this French overseas territory, a few islands, maybe about 5,600 in population, main industry is just fishing and then maybe a little bit of tourism. So there is, I guess, a lot of confusion, again, in terms of how the Trump administration came up with this formula in terms of reciprocal tariffs and sort of its stance towards all countries, regions, and territories, this blanket tariff. And I'm wondering, Einar, what this means overall for U.S. credibility going forward. So we don't know how the Trump administration will respond if other countries respond to these reciprocal tariffs. But then let's assume the Trump administration, so after this round, the second Trump administration, a Democrat administration comes in. But after this Democratic administration comes in 2029, after that, another protectionist U.S. administration comes in. I mean, what then? It seems like there's a lot of uncertainty in terms of how the U.S. will approach global commerce going forward.
Okay. Michael, you hit it right on the head. I mean, it's about reliability. And this is really what is going to be the long-term damaging factor. The U.S. is not, people look at it and say, well, we have no idea what's going to happen. It's just as you said, one administration goes, another one comes in. It's like a seesaw, right, left, and nothing actually gets done. But there's a tremendous amount of damage to the international, trading system, logistics, rule of law, etc. So, yeah, the countries have now had an epiphany. They do not want to take the U.S. on directly. It just doesn't make sense. But they're going to figure out a way to be less reliant. Now, here's the irony. The United States was the one who was saying, oh, don't get close to China. You don't want to be relying on them. They're terrible. They have debt trap diplomacy, all this kind of nonsense. It wasn't true. But here we have a classic example of the kettle calling the frying pan black, in the sense that the U.S. is doing exactly what it warned everyone else that China would do. In fact, China hasn't. China has opened up. China is open for business, all right? And businesses are taking notice. And right now, it's not just countries who are looking at this and saying, okay, the U.S. is unreliable, perhaps even a rogue nation. The businesses are saying, we can't rely on the U.S., all right? We have to make other plans. We're going to have to diversify. We're going to have to factor this in, that there's going to be this seesaw match politically in the United States, with right, left going at it, nothing getting accomplished, debts growing. Because, remember, while this is happening, Michael, what we have is the Congress is pushing through $4 trillion in tax cuts that are disproportionately going to be helping the very wealthy. This is politically, this is suicide. You know, giving yourself money when you're taking it out of the pockets of the very poor and the ones who can't afford it to give it to people who already have too much. This is going to boomerang on Trump. And that's why I'm saying very shortly, you can expect him to say, well, I've taught everyone a lesson. I've shown them I'm very serious. Now we'll do something else.
Yeah, I know. I think the contrast is extremely stark. We see these unilateralist protectionist policies from the United States, and we see here China taking unilateral actions as well. But like you alluded to, taking unilateral actions to open up its economy, visa-free travel policies as well. Einar, before we let you go, I do have one final question for you, because you mentioned these tax breaks. The U.S. has a massive and growing trade deficit. The country's national debt is absolutely going bonkers, I feel, with these deficits and these tax cuts. What does all of this mean? And again, with the tariffs as well, what does this all mean, you think, for the position and the future of the U.S. dollar going forward, if we still have all of this uncertainty when it comes to how the U.S. trades and treats its major trading partners?
Well, Michael, this is the other shoe. Donald Trump is heavily influenced by Robert Lighthizer. He was the previous and now current trade representative. So he laid this all out about 12 years ago. And he's the one who's been whispering in Trump's ear, this is the magic formula to bring back, America to the golden age. One is tariffs to scare companies into coming to the U.S. The second is devaluing the U.S. dollar by 30%. All right. If you plug that into any economic model, it'll tell you that 30%, that these tariffs with 30% devaluation of the dollar would result in somewhere between 42 and 50% inflation in the United States. And if that happens, look, the dollar as a stable currency is out the door. Who is going to trust putting their money into treasuries if they know that at any given time those can be halved? I mean, not halved, can be severely impacted. 70 cents on the dollar. You're losing 30% of your money. No one will do that. And that's why Trump has been pushing on the say, don't, put your money anywhere else. You got to, put it in U.S. Currency. And if you don't, I'm going to put more tariffs on you. But he's overusing. This is the little boy who cried wolf. All right. He keeps using that tariff stick, but it's over. He can't make it stick. And he's going to ruin the U.S. currency as a hegemonic trade currency. Countries, as I alluded to earlier, and even businesses are going to be looking for something much more stable. Now, this has a knock-on effect because the U.S. has been getting very, very low rates on its massive debt pile, which is at 36.2, and by the end of this year is going to be at $38 trillion and growing. The $4 trillion that I was talking about, more than the $3 trillion of that is unfunded. So it's going to be added to the debt pile. So you start looking at this, all of a sudden, okay, no one wants to hold dollars. You have this ballooning debt. That debt is going to have a factor of risk in it because it keeps growing. And people say, well, maybe they won't pay me back. So they're going to start having higher rates. That means that even more of the federal deficit, which was 1/6 of the federal budget, went into paying interest rates. Imagine if that went up to $2 trillion because rates go up because no one wants to hold treasuries because they could go down in terms of their underlying value. So this spells a lot of trouble for Donald Trump, the United States, but also the world. This kind of very fast transition to the unknown when countries aren't fully prepared to do anything except do direct currency transfers, and that becomes complex when you're dealing with many, many countries. This will have a knock-on effect throughout the world, but this kind of confusion, the uncertainty that it creates, it is depressing anybody from going ahead with real investments. And that's going to affect jobs. And as I said, this negative economic multiplier is going to hit everybody. But first and foremost, this is going to hit the United States the hardest.
Okay, we are going to leave it there. Einar, many thanks for your perspectives and insights as always. Einar Tangen, Senior Fellow at the Taihe Institute and Chairman of Asia Narratives. Well, Chunying, even Republican Senator Ted Cruz saying that it's going to be an absolute bloodbath for Republicans come 2026 for the U.S. midterms if Mr. Trump's tariff policies really impact the U.S. economy and perhaps get it into a recession. And speaking of which, the U.S. labor market was quite robust before Mr. Trump was elected president. Let's take a closer look in terms of how the U.S. job market may turn out now.
Tariffs, trade wars and global market meltdowns, Jerome Powell's comments gave a hint of where things go from here. And he didn't sugarcoat the stark new reality. The Fed chair was speaking at the Society for Advancing Business Editing and Writing's annual conference in Virginia, bringing what he described as calm, rational analysis following a turbulent few days. He said the US president's tariffs plan had created a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. And he warned that the countermeasures now being imposed by other countries were only adding to that unpredictability.
While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain.
Powell said that until the impact of the tariffs becomes clearer, the central bank does not plan to change interest rates. That, despite the president on Friday pushing Powell to do just that, writing on social media that it would be a perfect time for the Fed to cut rates. Also out on Friday, US monthly jobs data showing stronger growth than expected, with the US economy adding 228,000 jobs in March. However, unemployment ticked up from 4.1% to 4.2% as Elon Musk's Department of Government Efficiency axed thousands of federal workers. The White House press secretary, though, reacted to the data, saying the economy is starting to roar and that the golden age of America is on its way. But that rosy assessment is not widely shared beyond the Trump administration, with economists, governments and central banks around the world warning of tough days and economic uncertainty ahead. Nick Harper, CGTN, Washington.
Well, Michael, the impact of President Trump's 25% tariff on imported cars and auto parts is now raising concerns globally. Well, the president claimed that the tariffs would probably boost the U.S.-made car sales, but many economists are holding the opposite views. Let's take a listen.
This when Donald Trump said, I couldn't care less if other countries impose tariffs on American cars because the Americans would just buy more American-made cars.
One is very clearly that he knows that the U.S. consumers are eventually going to foot the bill for the tariffs. So domestic car could see the price rise by $3,000, imported car could be $6,000, and any cars could be up to $10,000. Number two, I think it's clear that he's thinking using the tariff that's going to protect the domestic industries and to increase production. But there are many questions as to how this is going to happen. For two major reasons, right? One is that if the automakers are enjoying their market share, they're being protected, they're able to produce less cars with higher prices and still earn that profit margin. Why would they have the incentives to expand the production and lower the prices for the consumers eventually? It's not going to happen. And second, tariff is not an effective tool to really reindustrialize the United States because it takes a lot more than just domestic protection. You need to invest in your infrastructure. The U.S.'s infrastructure is at a C- according to the Civilian Engineer Society. There's not enough trained workers to do the work. There's not enough, cheap, effective energies to support some of these industrial production. Not to mention, companies, they're not really interested in the long-term investments and expand their workforce and so on and so forth. So when you look at the big auto companies, last year they spent $6 billion on stock buybacks. The money could have been spent on, retraining the workforce and expand the production. They're not doing that. So I think, again, tariff is a terrible tool to accomplish those goals. It helps to deflect the attention for the U.S.'s inability to produce, but it's not really going to do the work of revitalizing the industrial sector.
I think, Chun-Ying, history offers a lot of lessons when it comes to economic protectionism, because back in 1828, when the U.S. enacted the tariff abominations, that made worse the tensions between the northern states of the U.S. and the southern states. And that, I think, played a role as well in terms of igniting the U.S. Civil War. Of course, we keep coming back to those Smoot-Hawley tariffs of the 1930s. That also played a role in terms of pushing the United States into the Great Depression, and perhaps also played a role in terms of sparking the Second World War as well. So history, I think, Chun-Ying, has shown that when protectionism arises, economic prosperity declines. Let's take a closer look.
Reciprocal tariffs on countries throughout the world. Reciprocal. That means they do it to us and we do it to them. I think tariffs are the most beautiful word. I think they're beautiful. It's going to make us rich. The protective tariff policy of the Republicans has been made and made the lives of our countrymen sweeter and brighter.
There'll be jobs in every part of the country. Red states, blue states, cities, small towns, rural communities, tribal communities.
It would have an adverse impact on the competitiveness of some sectors of the United States economy and could significantly raise costs to households.
We won't compromise and negotiate. I'll stand up for Australia.
It's going to be a big problem for Americans as well, but we will use every tool in our toolbox to fight back.
American politicians love tariffs. They treat it as a magic elixir that solves all their problems. But in reality, it is a poisoned chalice that destroys the very economy they claim to protect.
Importers pay the tariffs, but the people who actually bear the costs of the tariffs are usually the consumers, those buying the goods subject to the tariffs, whether they are individual consumers or companies purchasing components or resources for their production. Those are the ones that bear the higher cost, and those costs affect their ability to make a profit and stay in business.
The American people are well aware of the inevitable price increases to come. They have already begun stockpiling the goods they need.
Literally, there are zero things that are completely made in the United States without some sort of raw material or manufacturing or purchasing some sort of import from another country.
This is how tariffs work. Average Americans have to pay for them. Take shoes, for example. According to Footwear Distributors and Retailers of America, 99% of all shoes sold in the U.S. are imported. China accounts for over 60% of all imports. In 2018, tariffs were imposed. That means that in 2023, Americans paid an extra $9.3 billion for shoes. $9.3 billion just for shoes. What if there are tariffs on everything?
The only thing they do is bring down the standard of living in the United States, and there are a variety of other negative aspects in addition to bringing down the standard of living. And you get a lot more corruption because you get the politicians involved in setting the tariffs and the trade restrictions and protectionism. And people don't like that, and so what do? You hire a lobbyist to try to become exempt from the tariff. The exemptions, the tariffs were increased, but the exemptions for various groups went up tremendously. And why were the exemptions made? Because lobbyists were paying off politicians to vote for exemptions. So it fuels a lot of corruption.
In 2018, more than 1,100 economists signed an open letter to Congress opposing the move, warning of price hikes and a decrease in U.S. exports. But the warnings didn't stop the tariff raise, just like it failed to do nearly a century ago. The Tariff Act of Smoot-Hawley of 1930, under the Hoover administration, raised U.S. tariffs on over 20,000 imported goods during the Great Depression. U.S. exports and imports both plummeted by over 50%.
In 1930, the Republican-controlled House of Representatives, in an effort to alleviate the effects of the, anyone? The Great Depression, passed the, anyone? The tariff bill, the Hawley-Smoot Tariff Act, which, anyone, raised or lowered? Raised tariffs in an effort to collect more revenue for the federal government. Did it work? Anyone? Anyone know the effects? It did not work, and the United States sank deeper into the Great Depression.
Senator Smoot and Representative Hawley thought tariff hikes were the solution to foster domestic absorption to overproduction as a result of technological advancement. They thought they could help beleaguered farmers. They were wrong.
The Smoot-Hawley tariffs have a bad reputation, and for good reason. The higher tariffs reduced demand in the U.S. economy. They generated uncertainty that dampened investment in the U.S. economy, and thus undercut economic growth. The purpose was to hurt our trading partners, beggar thy neighbors, but beggar thy neighbor policies inevitably hurt the instigators as well as the target country.
It is ironic that the United States has repeatedly turned to tariffs as an economic tool. American politicians might have forgotten that it once proved to be a catalyst that propelled America down the road to revolution. On December 16, 1773, 342 chests of tea on board 3 merchant ships of the British East India Company were thrown into the sea by the Sons of Liberty. It was a protest against the British government's tea taxation, which forced America, then a colony of Britain, to pay import taxes on the tea they never agreed to. The colonists viewed them as unjust. The harsh response from the British government inflamed the resistance, setting the stage for the American Revolutionary War.
Then the tariff abominations came in 1828. It was a very complicated mess and was a north-south split. And tariffs, by the way, in 1830, 2 years after the tariff of abominations came in, they reached a peak of 62%. So they were very high tariffs. And the kind of headline feature of the Civil War was slavery, but actually it was economic, and it was set up, as you can see, about 30 years before the Civil War actually started.
The U.S. tariff of 1828, known as the Tariff of Abominations, imposed a 38% tax on some imported goods and a 45% tax on certain imported raw materials. The tariff was greatly opposed by the southern states, as it made imports more costly and also made it difficult for Europeans to pay for American exports. It fueled the divide between the industrial North and the agrarian South, a division which would eventually lead to Americans turning on each other. From Revolution to Civil War, from the Great Depression to today, America's tariff curse continues to haunt its economy. History's verdict is clear. When protectionism rises, prosperity falls.
All right, let's get more on these U.S. reciprocal tariffs and what it means for the U.S. economy and the global economy, and bring in Professor Joseph Mahoney, who is a professor of politics and international relations at the East China Normal University. Professor Mahoney, thank you for joining us on our program, and thank you for your patience. So we've had a lot of time now to digest what President Trump said on so-called Liberation Day and these reciprocal tariffs. Give us your overall takeaways from all of this.
Well, I think the first thing is, that some estimates indicate that it could raise costs for American families by as much as $3,500 per year on average. Further, as you noted previously, some scholars are pointing to these tariffs and the previous American experience with the Smoot-Hawley Tariff Act in 1930, which is believed to have doubled American unemployment and pushed the U.S. deeper into the Great Depression, while also contributing substantially to the broader global depression that only embedded during the Second World War. Second, we don't yet have a clear idea whether or not Trump would allow the chaos to continue down such a dark path. On the one hand, some experts believe it would take a year for such costs to accumulate against Americans. Others believe he needs American voters to see positive results within a year and a half before the midterm elections, or risk Republicans losing control of Congress and thereby rendering him not only a lame duck, but also subject to vicious Democrat-led congressional investigations. Now, we know that voters are very fickle in the United States. They're very sensitive to inflation. This is one of the reasons why they abandoned Democrats and brought him back to office. My guess is there will need to be adjustments to this policy sooner rather than later to avoid worst case scenarios, meaning he'll have to seek deals, offer exemptions, or make concessions. Alternatively, he could choose to go to war, which unfortunately is what some of his predecessors have done under such circumstances. In the meantime, in addition to a global recession, we'll face increased risks for black swan events, especially those related to the U.S. abandoning its commitments to foreign aid, public health, security, and efforts to mitigate climate change. Third, I think the global trade system has to find a new common ground without the U.S. Unless the WTO can find a way forward without Washington, because let's face it, the U.S. hasn't been a responsible member since the first Trump administration. Then we should assume that the global trade system will need to be addressed through other mechanisms, which can be developed as necessary through RCEP, ASEAN, BRICS, and so on, as well as through stronger ties with the EU and others who remain fundamentally committed to a multilateral rules-based order. Now, the world may also need to consider ways to accelerate de-dollarization, to free everyone from Washington's ability to control SWIFT and other mechanisms, as well as to prevent the U.S. from continuing to externalize costs associated with poor governance and deficit spending, as Washington has done with increasing intensity and frequency since 2008, but again, especially in 2020 and 2021, when it expanded the money supply by 20% to paper over its catastrophic response to the pandemic and dramatically increased deficit spending in turn.
All right, Joseph, the level of the trade disruption this time is completely different from the previous one. I mean, the first year of Trump's administration. So from your perspective, how should the countries facing those additional tariffs break the deadlock? I mean, how can they turn these challenges into opportunities?
Well, we need to see more countries coordinating their responses. And one of the things that I've really been heartened by is what we've already heard from China, Japan, and South Korea in this respect. Just in the past few years, we saw with the Biden doctrine, the incredible pressure being brought to bear in Tokyo and Seoul, these countries stuck in a security trap vis-a-vis the U.S., pressuring these countries to join a U.S. containment strategy against China. And now we see, of course, the opposite perhaps maturing in the sense that these countries are working with China to try to resist U.S. economic aggression. Now, we also need to see the strengthening of bilateral and regional trade agreements, again, especially in the RCEP. We also need to see BRICS members not breaking ranks or succumbing to Washington pressures. Washington having targeted BRICS, especially not just in these tariffs, but through other actions and threats that we've heard from Trump, but also his predecessor. But we also need to see countries continuing to work with China through BRI. This is a very constructive means for everyone to move together under win-win scenarios. We also need to encourage the EU to choose strategic autonomy, which I believe would compel them to negotiate in their own best interest when it comes to China and Russia, and not following the U.S. down some ideological path, which I think for once and for all they see is no longer something that they can abide with anyway.
Professor Mahoney, how do you expect the Trump administration's tariff policies will rewire the global multilateral trading system as we know it? Are we seeing a fundamental shift in terms of the geoeconomic and geopolitical landscape as we know it? And if I may, what kind of role do you think China might play in terms of stabilizing the global economy and global supply chains going forward?
Well, if this continues, then absolutely it will affect the global political landscape. It will stress test governments and political systems, and certainly local economies. We may see some governments failing as hardships mount, or if they choose policy responses that run contrary to their people's expectations or interests. We'll see the U.S. continuing, unfortunately, to meddle in the internal affairs of others, stoking more political fragmentation. As we've already seen with what Trump is doing with regard to Canada, Mexico, and Europe. We'll see these developments occurring as the U.S. works against the existing multilateral system on multiple fronts, while simultaneously contributing to new crises to exacerbate pressure points, whether to gain negotiating leverage or simply to diminish competitors through this zero-sum social Darwinism that emphasizes the worst aspects of capitalism. Now, some countries are well positioned for these challenges, most notably China and perhaps Russia, the former because its system is robust and well prepared, and Russia because it's found ways to survive and move forward despite the difficult test imposed by the West in recent years. Others will be more fragile. But it'll also transform the U.S. On the one hand, these trade war policies run in tandem with Trump trying to slam through some rather dramatic governmental reforms domestically while hoping to spark a national economic restructuring. On the other hand, he's already encountering resistance in the U.S. in different states and in the courts. And should his policies continue, then we might anticipate high inflation, unemployment, crime, political instability, and polarization, which would not only have impacts on the U.S. government, it would also reverberate around the world, and again could lead to broader conflicts that could fundamentally transform political order around the world. Now, with regard to your final point, what role can China play? I think what we have seen from China, particularly in the new era associated with President Xi, as China has reemerged on the national stage as a major power and has committed itself to a principles-based foreign policy, and above all, playing a clear role in supporting win-win solutions by helping countries in the global South, but also reaching out to others to foster peace and development. I think that China has demonstrated that it is the reliable partner, that it is the mature political system that other countries can count on. Now, that doesn't mean that countries can, try to exploit China or push China around or play games, but certainly, I think people need to realize that China is really the one country that can help them survive this onslaught, and not just this onslaught, but also the challenges associated with climate change, which I believe are the most pressing in the world, and quickly accelerating and mounting, given China's commitment to resisting climate change, as well as fostering green innovation and development.
Yeah, the Trump administration once again signing that order to pull out of the Paris Climate Agreement. We'll see what happens to the global community's collaborative efforts to tackling climate change if we have the world's largest economy once again pulling out of the Paris Agreement. Professor Mahoney, we're going to leave it there. Many thanks for your insights and perspectives on all of that. Professor Joseph Mahoney, Professor of Politics and International Relations at the East China Normal University. Thank you for your time.
Thank you.
Well, Chunying, of course, China has responded to Mr. Trump's tariffs, but we are seeing leaders in countries around the world also thinking about countermeasures. So Canadian Prime Minister Mark Carney also saying that Canada will respond. Of course, Prime Minister Carney saying that the old friendship, the old trading relationship between Canada and the United States is effectively over. Prime Minister Carney also saying that Canada has about $5.7 billion worth of auto tariffs ready to take against the United States in the coming days.
And meanwhile, the French President Emmanuel Macron also called for a suspension of investment in the United States after Trump imposed 20% tariffs on imports from the European Union. And also, France's Minister of Foreign Trade has urged solidarity among firms and criticized Trump's move as causing a recession.
Right. So we will see how the European Union will respond. Of course, European Commission President Ursula von der Leyen saying that she would try and perhaps negotiate with the Trump administration first and then impose countermeasures. But let's take a closer look in terms of how the EU might respond.
Speaking on Friday, the President of the European Commission, Ursula von der Leyen, stressed the importance of unity in the face of tariff-induced global turbulence. President Donald Trump's announcement on Wednesday continues to rock global markets. The European Union, like many regions, is trying to steady the ship while deciding its next move.
We're in uncharted waters here. All we can do as the European Commission is fulfill our treaty role, fulfill the responsibility given to us by our member states to drive forward EU trade policy in the best interest of European consumers, in the best interest of European businesses.
Well, the talking has begun. The European Union's top trade negotiator, Maroš Šefčovič, had a call with members of the Trump administration on Friday. The EU is determined to work with Washington to lessen the impact of the new tariffs, but if dialogue fails, the trading bloc has not ruled out imposing counter tariffs, as China and Canada have already done. Also on Friday, the French industry minister suggested one possible response could be the EU introducing tariffs on the US plane maker Boeing. Ross Cullen, CGTN, Brussels.
Well, African countries are also bracing for the brunt of Mr. Trump's tariffs. Two of the continent's poorest countries, Madagascar, for example, being hit with a 47% tariff. Lesotho, also a very small landlocked country in Africa, being hit with a 50% tariff. As we understand, a trade delegation from Lesotho is going to Washington to see if tariffs can be reduced. South Africa also being hit with a hefty tariff of 30%. Its industry, its businesses, how are they responding? Our Sumitra Naidu has more from South Africa.
African countries are still digesting the news about the new U.S. tariffs. South Africa was hit with a 30% reciprocal tariff adjustment. The tariffs were calculated based on a formula that divides a country's trade surplus with the U.S. by its total exports. Last year, South Africa exported $20.5 billion to the U.S. and imported $5.8 billion worth of goods.
The biggest impact will be on the automotive sector because in this particular case, the United States is an important market for our automotive exports. For the rest of Africa, as well as the balance of South Africa, the sectors that will be most severely hit are agricultural products, things such as citrus, and in addition, in South Africa's case, wine exports will be severely impacted.
South Africa noted the tariff adjustments with concern, saying the punitive tariffs will serve as a barrier to trade and shared prosperity. But the presidency added that it presents an opportunity to renegotiate trade deals.
I think there is a lot of concern. It may not be that much expressed now openly, but there will be a lot of concern around this because this could, at a time where the South African economy, are facing certain difficulties, the timing really is not that good. So I think South Africa also have expressed their opinion that they will continue those engagements with the US government, but certainly it will also have quite an impact on South African businesses.
African countries were the worst hit. In southern Africa alone, Lesotho was slapped with a massive 50% tariff adjustment, and Madagascar 47%. Mauritius suffered a 40% tariff hit, Botswana 37%, Angola 32%, and Namibia 21%.
That a few African countries like Lesotho and Madagascar, and even I think Mauritius, were actually very high. And so, that immediately puts them into a very difficult position. Again, I think the important thing is not to terminate any engagements with the US. You will need to continue those discussions, and those countries will have to do so at the very highest level.
It's going to be a rough road ahead for many African countries, but experts are calling for cool heads during these uncertain times. Sumitra Naidu, CGTN, Johannesburg.
All right, Michael, it seems like everybody is feeling the pain. And there are fears that this trade disruptions could definitely sap the business confidence globally. And the JP Morgan earlier has raised its odds for a global and economic recession to 60% from the previous 40%. The S&P Global has also raised its forecast for a U.S. recession to between 30 and 35% from 25% in March. Goldman Sachs also increased its prediction to a 35% chance from 20%. Other research firms, including Barclays, Bank of America, Global Research, Deutsche Bank, and RBC Capital Markets also warned the U.S. economy faces a higher risk of slipping into a recession if Trump new levies.
Yeah, Chunying, so absolutely a lot of uncertainty for the global economy, for global trade going forward. We were just talking about Mr. Trump's tariffs on Africa. Actually, there's something that the U.S. enacted with African countries back in 2000 called the African Growth and Opportunities Act, and that provides tariff-free trade between the United States and many African countries for over 6,500 products. That expires, the African Growth and Opportunity Act expires this year in September. So based on how Mr. Trump is viewing global trade, we'll see if the U.S. renews that or whether or not African countries face lower barriers on that front. But again, a lot of uncertainty, a lot of volatility, I think.
Yes, I think we're all looking forward to see where will this chaos, trade chaos, end up.
Yeah, I mean, the IMF is forecasting about 3.3% global growth for this year. I think for their next global economic outlook, they'll probably have to revise that down a lot more.
But perhaps one thing is clear, the economic stakes couldn't be higher. And, there wouldn't be a winner in this trade war if it really happens.
I mean, there is certainly no winner because according to standard economic theory, tariffs do exactly the opposite of what they intend to do. It doesn't shrink the trade deficit by much, if at all, because it's really about how much you spend. If you spend more than you produce, then you're going to have a trade deficit. So in the United States, families save a lot less relative to other major economies. It consumes a lot more than it produces, so it's going to have a trade deficit with other countries. We're going to see if businesses come back and reindustrialize the United States. Of course, that's going to be a lot of cost, a lot of greenfield investments going back to the U.S. Amid all of this policy uncertainty. Again, a major question mark. And whether or not we're going to see strong countermeasures from other countries towards Mr. Trump's so-called reciprocal tariffs. So a lot of question marks, but we hate to end, I guess, on such uncertainty.
But at the end of the day, I think everybody will bear the cost.
Everybody's going to bear the costs, and I think China will play definitely a key stabilizing role in terms of the global economy and global supply chains going forward as China continues to unilaterally expand and open up market access towards its economy, as China really prioritizing consumption this year. So going down the road, according to experts that I've spoken to, they're all expecting China to become the largest consumer market in the world. So that has implications, of course, in terms of opportunities for businesses all over the world to do business in the China market. We now have about 400 million plus people in the middle income population here in China. The goal is to get to 800 million plus by 2035. So that is going to be a massive consumption market for the global economy, for businesses all around the world. And on that note, we are going to wrap it up for this CGTN special live stream in terms of what U.S. reciprocal trade policies mean for the global economy and global trade. I'm Michael Wong.
I'm Zheng Chunying.
Thanks for joining us, and we'll see you again next time.
See you then.